It's the Real Estate Podcast, brought to you by ANZ Home Loans for financial well-beings.
And welcome back to another Real Estate Podcast, right around Australia, 7 days a week. What are we talking about? It's all about your property news and information from Noosa to the suburb of Morphett Vale. And if you don't know where that is, it's in the southern part of Adelaide. As you can stream us right now wherever you are on multiple platforms, including Amazon and Spotify. It is a Thursday morning, chugging towards the end of another working week, April the 3rd. I thought this was interesting. A new report from Suburb Trends has revealed where mortgage-free homeowners are thriving across Australia. In Adelaide, West Lakes tops the list with more than half, 53% of homes that are owned outright. Over in Melbourne, Flinders and Thomastown stand out, while Sydney's Bayview and Mossman are packed with debt-free property owners. Yes, just imagine how many of those debt-free homeowners in Mossman there are. And you would think that that sounds all really positive for those homeowners, but the experts warn that too many mortgage-free homes can slow down the market, widening the wealth gap and making it even harder for younger and lower income buyers to get a foot in the door. Well, let's right now go to the sunshine capital of Australia. In fact, I'm not sure if we can claim that to be the sunshine capital of Australia. Hervey Bay. Let's go to Scott Mitchell from Mitchell's Realty on the Fraser Coast. And a very good morning to you, Scott. Welcome back to the Real Estate Breakfast. Capital, sunshine capital, what do you think?
I'll take it because we haven't seen any blue sky. I reckon it feels like a month. We could do with some of that sunshine. We've definitely had enough rain. Let's work on reclaiming that title if it ever was one.
Well, it's one of the reasons why Hervey Bay is one of the happiest places, the most happiest places, because of the sunshine hours. And just coming back to that reporting on all those mortgage-free homes, I reckon Hervey Bay would have their fair cluster of people because quite a high number of retirees, of course.
It would be a high number for Hervey Bay for sure. And even the amount of buyers we're dealing with, they're coming in as cash buyers and they just buy. So we deal with a lot of cash buyers. So I'll have to do some digging for you, mate. We'll come back to you with a figure.
Yeah, that'll be good. We'll talk about that next time. Also from CoreLogic, they're saying that despite a brief dip, Australian property prices hit new highs in March last month. And they're saying that home values are up almost in every city, with the national median now at over $820,000. The boost is linked to February's interest rate cuts, which lifted market confidence. And yesterday, once again, we were in pause mode, but it's not going up. And I think probably in another 6 weeks' time when they revisit this, stand by, because I think we'll see that come down 25 basis points.
Yeah, no, I would agree with that actually, Craig. I think there's some politics possibly behind some of these decisions at the moment. We've got an election coming up, which is an excuse for many sectors to put things on pause until we get an outcome. So maybe interest rates was just another one of those things that are sitting on pause, but all of the head economists are forecasting comfortably another 2 to 3 rate drops this year. So yeah, I think we'll only be on pause till we get past the election, and consumer confidence has already improved across the board, which I think has helped spike those CoreLogic statistics in our housing markets nationally. Once we get the election out of the way, I'm confident we'll see a couple more reductions this year, and that's got to be good for anyone with a mortgage or looking to get into the market.
And Hervey Bay property values, they're continuing to rise. Tell us a little bit about that.
Yeah, it's still steady. So we recently had a breakfast actually where we had the principal of Heron Todd White, Doug Chandler, spoke to us and gave some really good, accurate information from the valuing industry, being one of the largest national valuers. They run we've spoken about this previously, about their property clock, which is a really good barometer of how any region in the country is tracking. It shows you in a clock face, essentially, are you at the peak of the market? Are you in a declining market? Is it a stable market or rising market? Are the main points there? And Hervey Bay is still in a rising market cycle, and we've been in that part of the clock face at the moment, sitting around that sort of 10 o'clock for over a year now, and we're still trending up. Last year, we saw across the board in our market solid 10% capital growth, and the forecast this year is certainly still trending between 5 and 10% potential capital growth in our market again. So really positive indicators for our market. Still plenty of scope to get into our market at an affordable level, particularly if you compare our pricing to anywhere south of us, down through the Sunshine Coast, Noosa all the way back to Brisbane. We're still very affordable. Fantastic lifestyle. We talk about often about living in Hervey Bay and having our country's most temperate subtropical climate, which we do have, but we could certainly do with some more blue sky days at the moment.
A little bit more from Core Logic. They're saying that regional markets, they are outperforming the cities at the moment. The biggest price growth isn't in Sydney or Melbourne. It's regional areas, and WA's Midwest and Townsville, they are leading the charge, while Perth, which saw a massive 75% increase since 2020, has now hit a plateau. And Hervey Bay is certainly one of those regional areas that are performing pretty sweetly at the moment. When we come back, we'll continue the conversation with Scott Mitchell in Hervey Bay. We'll have a look at the Fraser Coast market insights for the rental market and find out what that is doing. We'll do that after this.
Decode the property market with insider knowledge and insights to better navigate your real estate journey.
Nicola from Domain is with us, and I want to get to Sydney, Canberra, Melbourne, Brisbane, Adelaide and Hobart. They have all exceeded the benchmark for entry-priced houses. Sydney and Canberra are the most affected.
They certainly are. When we look at Sydney, it really showcases the financial impact of high property prices and what it has on first home buyers. Almost 58% of income is needed to cover the mortgage repayments of an entry price house. This is the most extreme out of all of our capital cities, but also Canberra is up there. It's almost 47% of income needed to cover the mortgage repayment of an entry price house. In Canberra, though, what's interesting is it has slid. It has become smaller over the past year, but it's still up there and really just shows how unaffordable some of our capital cities are. But I think one of the aspects of this report is we looked at entry unit prices too. And when you look at the landscape for affordability in the unit sector, it is much, much better. And I think what it does showcase is realistically for most first home buyers, their first home does come in the shape of a unit.
Let's explore together the power of real estate.
And it is a Real Estate Thursday. We're on the Fraser Coast in Hervey Bay talking to Scott Mitchell from Mitchell's Realty this morning. He's giving us the very latest from this regional area. And Scott, you're going to tell us a little bit about what the rental market is doing.
The rental market's still been really, really strong during that recent breakfast where Doug spoke on a couple of those key points across the Fraser Coast and highlighted the fact that 24.3% of the Fraser Coast population do live in rental accommodation, and that the rental stocks were approximately 312 properties, and we're still sitting on a vacancy rate of 0.53%. So it's a super tight rental market. Rents have increased, which is, I suppose, positive if you're an investor, but it's tough. It's tough going for those that are needing to rent and find a rental. The competition is still certainly high. Coming back to real estate, it's a great time to still invest in our local property market. You can still purchase a brand new house and land package, like a turnkey package, for around that 625 to 650, and that property is going to comfortably return somewhere between that sort of 630 to 650,000, depending on the build and location. So it's still a solid opportunity to get into the Hervey Bay market as an investor. We can't see those trends changing in the short term.
Now, we should sort of give a bit of a nod here to the recent flooding events, because as I understand it, Hervey Bay has prompted lender revaluations, and this could be potentially quite serious for homeowners, I would imagine, when it comes to mapping the area and where the water did get in.
Yeah, certainly. Look, and I've been guilty. I've been here just 19 or it'll be 20 years in January I've lived in Hervey Bay, and we've not seen a weather event like that in our time. And I would have said to buyers when they said, does the area flood? I would have said, no, we really didn't have anywhere that was a highlighted flood risk area across Hervey Bay. We have storm surge, and there's mapping on the council website under the emergency and evacuation mapping you can download, but that's going to definitely be reviewed, because this was a specific flood event that was from rain. It was prolonged 100 mils of rain per hour for 3 hours. So it was an extreme event, but we saw a fairly high number of properties were directly impacted by flooding that have not been impacted previously. That will definitely flow through now to the council mapping, and there'll be an impact on both insurance values, unquestionably, and also Doug highlighted the fact it's probably too early to suggest valuation on those flood-affected properties, but everywhere else where we've had flood-impacted property, there's going to be a reflection in the value of those homes going forward, and we're likely to see those impacted properties will have a review on their values going forward for sure.
All right, we'll leave it there. That is the very latest from Scott in Hervey Bay, and we will catch you back again in about 3 to 4 weeks' time. Enjoy your Thursday, Scott. And once again, thanks for coming on to the Real Estate Breakfast.
More blue sky and fishing next month, Craig.
It's the Real Estate Podcast, talking properties from 6 a.m. every day from every corner of the Australian real estate market.
Yeah, absolutely. I think prices will continue to rise over the course of the next 5 years. National property prices have risen by about 40% over the past 5 years. Capital City is up about 35%. Regional markets up almost 60%.
Some economists believe that Melbourne may lag due to higher unemployment and investor taxes. You're kind of, 50-50 on that?
Yeah, well, I think that lag has actually occurred over the past 5 years. I mean, prices in Melbourne only grew about 8.2% according to CoreLogic over the past 5 years, while Sydney was up almost 30%, Brisbane up almost 70%, Adelaide over 70%, and Perth up 75%. We can see that Melbourne really has lagged over the course of the past 5 years, but I think, this underperformance is probably actually its biggest strength going forward.
We connect you to the best real estate information across Australia. The Real Estate Podcast.